Hello everyone. Today we're going to talk about millennials, their coming of age in this digital era, and how their behavioral traits are going to shape the future of the banking and fintech industry. I am Maithili Madhav from the Banking and Financial Services practice at Aspire Systems, and I have with me Vishwas Anand, who heads the thought leadership team here.
Hello everyone.
Millennials, as you may already be aware, are today becoming the largest living demographic around the world. Here is a sneak peek at a few details of the millennials. They are born between 1980 and 1999 and are currently aged between 19 and 37. They are entering their prime spending age, and when compared to Gen X or baby boomers, millennials want to become financially stable first before they settle down in their lives. Like they get married and have their first child later than any previous generation. The most important thing to remember here is that this generation has come of age with the internet, mobile devices, and the ubiquitous social media. They becoming the so-called digital natives.
Very interesting, Maithili. So how do you think they're going to impact the BFS industry?
Good question, Vishwas. Just take a look at the stats given here. It says 39% of the millennials would consider a branchless banking experience. Isn't this unheard of in the previous generation? My father still goes to a bank's teller to withdraw his money. Look at this stat. Only 32% of the millennials feel their bank understands them. Now, this is a bigger concern for the banks to take care of. As you can see, the BFS industry itself is catching up with the digital disruption and is oriented towards being product-centric. They want to woo their clients by enriching their product capabilities. A key factor in the enrichment is the market feedback the bank gets from their clients on their products. Gen X and baby boomers had the tolerance and time to loop back with banks to present their banking strategies. But the millennials have a unique scenario altogether. On one hand, they have a plethora of providers to choose from, and on the other, they have access to digital content that presents a ready-made comparative study of the various market providers available for them. Added to this is the peer pressure to choose a uniform service provider for themselves with P2P services, all falling under one umbrella. For example, in India, Paytm, a company backed by Alibaba, charges a 2% transaction fee, whereas PayZapp, a competitor to Paytm, charges 0%. In fact, a group of millennials that I know of changed from Paytm to PayZapp overnight just because of the product market fit. And another major factor influencing this shift also being the peer feedback via social media.
True, Maithili. Now coming to the feedback cycle, there are two kinds. Millennials offer peer feedback socially, but tend to be silent sufferers with their banks. Neither do they have the patience nor the time to connect back with their bank to provide valuable feedback. They just move on to another bank or look for alternative financial products that satisfy their needs.
That's correct. Millennials are far more likely than any other demographic to leave their primary bank if the bank doesn't suit their needs. Also, added to this, the smartphone adoption of millennials is a major player for banks to plan on their next wave of digitization. As the stats on screen will indicate, a mobile-first approach is what will win in the retention of millennial customers. Interestingly, millennials leave institutions that don't meet their mobile banking needs. They reject solutions that are fragmented and inconsistent across different devices. They accept personalized offers for banking services that appeal to them, and they use customizable budgeting tools to track their day-to-day expenses. This data clearly indicates that banks should move away from being product-centric and start becoming customer-centric. This would mean analyzing their clients' behavioral pattern, predicting what would they want next and do next, and offering them customized solutions to cater to their needs.
Interesting, Maithili. So for banks who are still wondering if millennials are the right target segment, the simple answer is they wouldn't exist if they don't actively transform their engagements with millennials in the next year or two. The millennial banking revolution is going to take the banking industry by storm globally. The time has come for banks to wake up to the harsh reality that experiences are necessary for millennials. Banks are sadly not. They need to have a strong millennial engagement strategy to make millennials experience this change. Rather than a business to consumer approach, they need to start thinking about a consumer to business approach. Only when they put customer outcomes at the center of this value chain will they truly be embracing the millennial banking revolution.
That's true. In fact, Europe would be bracing itself for PSG2. Come January 2018, this is expected to have far-reaching effects across banks, payment service providers, fintechs, and corporates. The UK government is also mandating an open banking standard to boost innovation. The Monetary Authority of Singapore recently chalked out a plan for the central bank to move towards an open application programming interface architecture, API, what is we call. As other countries globally are following suit, business models would get disrupted at a staggering pace, and APIs are at the heart of this revolution.
And amidst these developments, banks need to know how to tap into this millennial banking ecosystem. Banks that are successful would be able to expand their markets, drive new revenue streams, and foster a climate of innovation. The innovators would set benchmarks for real-time collaborative ecosystems.
Here at Aspire Systems, we have devised what we call as the Millennial Banking Technology Framework, a framework which we believe is where the banking industry is heading towards and which will cater to the whims and fancies of the digitally disrupted millennial. This framework will help banks build new business models for products, services, and data in this millennial banking ecosystem. According to a World Retail Banking Report 2017, 91.3% of banks and 75.3% of fintechs would like to partner with each other in the future. The central idea is to offer next-generation banking services through various channels and build a sustainable ecosystem.
Okay, now looking at the framework, we have millennials at the center of the value chain, highlighting the strong customer-centric approach that banks need to visualize in order to win over their millennial audience. Unfortunately, according to research by Cassandra that tracks generational trends, millennials are turned off by banks because they don't offer appealing products and services. Millennials are surrounded by mobility, and this should be the first layer of focus. Instant gratification from a readily available mobile device is what a millennial seeks. In keeping with the Facebook, Apple, and Amazon age, sleek mobile apps, digital payments, and IoT integration for accelerated connectivity is paramount to touch these moments of truth. The future of millennial experiences is in challenging older payment systems with new transactional systems like Bitcoins or blockchain.
Yes, I recently came across that an app-based digital bank, Atom, in UK uses gaming software for engaging customer interactions. In India, DBS, a bank, launched DigiBank that uses biometrics to identify their millennial customers' moment of truth.
Okay, so now we move to the next layer of amplified social connectivity, or in simple terms, killer customer experience. Omnichannel has become a way of life for millennials, and they crave for experience-driven banking in any channel of their choice.
In my experience in delivering banking projects to large banks across geographies, tools like Temenos or Episerver help build a dynamic, rich, UX-responsive design with consistent customer experience and self-service capabilities. This is across multiple channels from a single platform with seamless integration to third-party systems and apps.
Now the final layer is contextualized analytics that cuts through all the layers and creates trust in a bank's services. Unfortunately, this is missing in a lot of banks today. In our last webinar, we spoke about banks only focusing on the medium rather than the message. The key here is for banks to use the 3A model of authenticity, accuracy, and agility to optimize moments of truth in a millennial's journey. A phygital strategy thus becomes crucial as a rich message needs to bring in the human touch at the right moment.
That's true. Accenture conducted a study across 18 markets and found out nearly two-thirds of consumers still want human interaction in financial services, especially with advice related to complex products like mortgages.
Interesting. So all the different layers fit into the larger picture involving regulatory compliance, API management, and risk management. Millennials interact with other financial service providers through solutions developed in the layers, either through digital banking solutions offered by their banks or through third-party partnerships that banks have with their service partners, solution partners, aggregators, or payment providers. Cloud-based technology is expected to play a key role to deliver digital banking experiences with the highest standards of risk management, security, and compliance.
I am now going to walk you through a very popular success story of ours with regard to the millennial population. This story revolves around our engagement with one of Singapore's top private bank. Did you know which was? According to Forbes, every 1 in 20 Singapore's millennials is going to be a millionaire next year.
Wow, that's fascinating, Maithili.
The bank realized that the ever-changing millennial clientele now demanded a 24/7 digital connect with their relationship managers. While relationship managers failed to create trusted relationships in the digital world with them, the millennial customers seemed less interested in the services they provided. Aspire Systems chose Temenos digital channels to be implemented at the bank's end. We created a solution that pulled millennial customers closer to their relationship managers. We have partnered with solution providers like Oracle, Temenos, Episerver, and many more to provide a great millennial banking experience.
Okay, so we come to the end of the webinar. So thank you for joining us today. And I do hope you have some key takeaways from this webinar towards your millennial banking journey.
Thank you all again for joining us. If you do have any questions, please reach out to info@aspiresys.com. Thank you.